There's two parts of this tax plan. There's the individual side and the corporate side. My op-ed was focused on the corporate side. What I said about the individual side, we're going to be able to evaluate it when a plan comes out.
Okay.
We haven't seen a fully specified plan. What it looks like is there's going to be some small tax cuts for individuals, some small tax increases for individuals. Those look like they're roughly a wash. Some people are going to get a tax cut. Some people are going to get a tax increase. Maybe a little bit more will get a tax cut. A little bit more get a tax increase. We'll have to wait to see the details. No one debates that. The real debate here is you're not going to get a tax cut from the individual part. Will you benefit from the corporate part?
Right.
That's what I was addressing in my
and then
op-ed
the other thing that I was you weren't here, so I was kind of needling you a little. I guess I have to do it in person with you here. You were in the past. You've said, and I've heard Larry Summers say that there's not an economist left around that believes in some of the dynamic stuff and some of the trickle down or supply, whatever it is that you're talking about. You're saying, and then we have like Kevin Hassett on, and he goes, "I'm an economist, and I propose." So I don't think it's true that no one believes it.
You're read what I said.
No, but you said there's been no. You want papers. You want peer-reviewed economic
papers. We should use dynamic scoring to assess tax cuts. And the thing is, when you do use dynamic scoring, it turns out that if you have a really badly designed tax cut that's increasing the debt, that has temporary provisions expiring, that has mismatches of depreciations and interest deductions, you're going to hurt economic growth, hurt wages. You're not going to help.
I saw that you said if the debt goes up, that at that point capital formation is hurt. And and I understand crowding out. I understand all that. But you seemed, and I asked Senator Heitkamp. She's here with us today. I said, we gave you $10 trillion to work with over 8 years, and we got 1.8% growth. I mean, you weren't worried about lack of capital investment when you were running up that bill, Jason, and now you're worried about $1.5 trillion and what that might do to growth. Give the Republicans $5 trillion. They don't even want 10.
President Obama's first year, the deficit was 10% of GDP. His last year, the deficit was 3% of GDP. He cut it by 3/4. President Trump wants to cut it by another 3/4. That would be fine with me, but that's not what this plan is going to do. This plan is going to add to our debt, and that's a big problem because the argument for this plan is that it's going to help our economy. It's going to indirectly raise wages by helping our economy. You can only have that whole sequence of events. You do this, you do that, you do that, you do that, you do that. Wages go up if the plan works. And right now, as it's designed, unfortunately, it doesn't.
I don't know how it finally all plays out, Jason. It's tough to say something. I'm not sure that you can say we haven't had any peer-reviewed papers over the past. I mean, do you really want to rely on academics and papers?
The question is, has there been?
Go ahead.
The question is, has there been anyone that's defended the proposition that wages will go up by between $4,000 and $9,000? I haven't seen anyone defend that. I saw 2 op-eds in the Wall Street Journal last week, an excellent newspaper, by the way. They were positive on the plan. They had numbers that were below 4,000. I haven't seen anyone defend those 2 numbers. In fact, I think the interesting debate is whether the effect is positive or negative, but certainly no one is out there with numbers like that.
I don't know. You listen to people talk about just the effect on corporate earnings and on stock market and on the wealth effect that the Fed has tried to engender over the past 7 or 8 years. We know that it does work. If you do see a wealth effect, sooner or later the underlying economy seems to benefit and catch up with maybe some of the movement in the stock market. Just philosophically, Jason, don't you think that money is better served left, that we should always try to keep more in the private sector where it can be used to try to generate returns and try to increase capital, and it's just treated better than when it's in the public sector? Isn't that philosophically something we can just assume?
You know the only way to keep more money in the private sector is to cut government spending. If you're not cutting government spending, and by the way, President Obama had proposals on entitlements, on Medicare and on Social Security. President Trump has proposals on neither of those and has taken both those off the table. If you're not cutting government spending, you can't actually cut taxes.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.